Welcome to ShortView Trading, your morning market hit for Monday, 9th of August. What matters today and this week for traders? So the key question following on from Friday's price action relates in particular to US 10-year bond yields. It was a dramatic move, but was it a decisive shift and a decisive change of trend? And if so, what does that mean for equity markets? And indeed, you can see from the chart in front of you now that US 10-year yields shifted sharply higher on that payrolls news. As we know, payrolls much stronger than expected, plus stronger wage inflation as well. And with that, 10-year yields were having been trading around low 120s, shifted up towards 130 pretty quickly on a yield basis on Friday. That, of course, drove a dramatic rotation in equity markets. The sectors that like yields higher did very well. Nasdaq banks, or banks in general, financials in particular, were very much at the center of that, with the Nasdaq Banks Index up 2.8% on the session. Other cyclicals also doing well, materials and industrials both performing well on the day. And equally, those that don't like higher yields, as we know, tech in general, growth stocks more broadly, suffering on the session, with the Nasdaq 100 trading lower on Fridays during the cash session. And with that, other asset classes linked to bonds, in particular, I'm thinking of gold and silver, performing very poorly. Of course, real bond yields, TIPS yields backed up sharply, along with nominal 10-year yields, and gold is inversely correlated to that move. And so it was off sharply on Friday, both gold and silver, and was sharply off in overnight Asian trading. So the question was the shift in yields a decisive change in trend, or was it just a one-off blip? Clearly, from a technical perspective, if you look at the chart in front of you now, you can see that technically yields have put in a double bottom. We're looking at closing yields here, closing around 119 in mid-July, and then also earlier last week, finding support at that level. So from that technical perspective, it looks yes. Equally, if you look at the intraday action on yields, you get a similar sort of conclusion. A double bottom in at the low 110s over the course of the last month, testing that again last week. So from a technical yield perspective, it looks as though it's a decisive shift in trend. And with that, we're also starting to see some of the more cyclically based and biased equity markets breaking out to the upside. I'm thinking, for example, of the European equity market, which you can see in front of you now, clearly breaking to the upside, having consolidated over recent weeks. Last week, breaking above those levels, moving to the upside, reinforced by what we saw in terms of price action on Friday. Equally, if you look at the FTSE 250, a similar sort of pattern. And equally over in Australia, the ASX 200, their main equity market, behaving similarly to those other cyclical indices that I've thrown up in front of you in the last few charts. So clearly equities breaking to the upside. And with that, we have a bunch of short-term models supporting that idea, generating buy signals or being close to buy. For example, as you can see in front of you now, the put to call ratio is very close to its key buy levels, which has been a pretty good indicator to move long these equity markets on a 1 to 2 week basis over recent months. So to see how we're playing this and our full assessment of our models, please see today's Daily Rag, available to subscribers via the website. Or if you're interested in a free trial, please click on the link below for a 7-day free trial. Simply enter your name and email address, no need for credit card details, and we'll send you the Daily Rag for free for 7 trading sessions. But for the full detail on how we're playing this, please see today's Daily Rag. So what are we watching this week? Well, there's a number of themes. Firstly, there's an inflation theme across the globe. We had Chinese inflation out over the weekend. We got US headline and core CPI over the course of this week, along with some European inflation data points. They're going to be watched very closely. That's the big risk in global markets, that inflation isn't transitory. Over and above that, we've got various bits and pieces of US data, including JOLTS data today, the job openings, as well as the NFIB small business optimism and Michigan sentiment at the end of this week. And then, of course, we've got the key Chinese lending data, the total social financing and money supply data out sometime this week. And then also on top of that, there's some speeches from some Fed governors, including Kaplan, Mester, who's always important, and George over the course of this week. So that's it from us. That's your morning market hit for Monday, 9th of August. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading, or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.